Alrighty, so thanks guys for coming to our talk. So these are just some, topics that are very important, but less likely to be actually taught in a physical curriculum, as we've seen so far. So we just wanted to, bring these topics to your attention. We're not claiming to be experts in any one thing. We more wanted you to be aware and help you kick off your own personal researching. So first, we have no disclosures. And next, we're going to get into, sorry to start off with kind of a morbid topic, but so we're going to be talking about insurances. So disability, life, malpractice, and umbrella. These are some kind of 4 key insurances to just be aware of. So first, disability insurance. It's important to cover your income should you become disabled. The key feature is that you want this to be own occupation. If you are working as an emergency room physician and you become permanently disabled such that you can't work, you want to be covered as an emergency room physician, right? You don't want an insurance company to say, well, I think you could teach, or you could take this job over here, or you could become a radiologist because you just have to sit in a room, something, right? Like, no, they don't understand how our education works, how our job works. So you need to make sure it's fully own occupation. Another thing is to get it early. Disability insurance is a little expensive. It typically runs, several $100s per month. But the younger you are when you get it, the less likely you are to have medical problems. So you'll have it'll be cheaper for you in that way. And if you get it or apply before graduating, usually a lot of companies allow 30 days after your graduation date, you can actually be locked in at a substantially cheaper rate. It's usually about 20 to 30% less if you start as a resident. So something to consider. And another thing is that your employer will usually have some sort of disability insurance for you, but keep in mind that that is not portable. This is different in that you are going out and you are purchasing your own disability insurance. And so that would be portable if you move jobs. Your employer's disability insurance, if you move, drop down to less than full time or what have you, you usually lose that disability coverage. So you want to have your own and have it be portable with you. The next insurance to consider is life insurance. So things we talk about here are how much, who, and what. So for how much, you usually want to make sure that your beneficiary will be covered for the cost of things like housing, cost of living, education, that sort of thing. Who, so you're going to be insuring yourself. You also want to be careful to consider a spouse or a partner who works from home. Just because they're not providing, you're not seeing money coming into a checking account every week from their work, doesn't mean that you don't want to insure them. They're providing things like running the house, food, education, childcare. These are all monetary things. So you should consider covering them as well. Another big thing when we talk about life insurance is the what. So you might have heard term versus whole life insurance. And I'm not trying to sway you any one way, but the vast majority of financial blogs and financial advisors will say that term life insurance is probably more beneficial for more people than is whole. So what's the difference? Term life insurance is that you're insuring your life for a period of time. So say you're 30 years old and you take out a 30-year term life insurance. That means that if you were to, God forbid, die before you're 60, then your beneficiary would be paid that amount that you chose. Whereas whole life insures your whole life. So there is no expiration date. Whole life is significantly more expensive to purchase, but it does have the benefit that it's tax protected growth and you can borrow against it, which is why some people go for that. Malpractice insurance. So malpractice is usually covered by your employer, but just wanted to get some definitions down. So claims made policy is one type of malpractice. So that will only provide coverage if the policy is in effect both when the incident took place and when the claim is filed. So that can be a gap of time, right? So you need something called tail insurance with claims made to cover claims that come in after your coverage lapse. So this is something to keep in mind. Usually your employer covers this if you're full-time, fully employed by your institution, what have you. But if you are a per diem or you're an independent contractor for an institution, they might have you pay for your own tail, which can be extremely expensive. So just something to keep in mind when you're negotiating your first contract with them. Another policy is occurrence. So this is different in that it covers any claim made for an event that took place during the period of coverage, even if the claim is filed way after the coverage lapses. This option is more expensive. And finally, umbrella insurance. So umbrella is to protect your personal assets. So if you're sued for damages that exceed the liability of your car insurance, homeowner's insurance, boat insurance, anything like that, that's when umbrella insurance kicks in and will cover the difference. It does not cover your own injuries and it does not cover your malpractice. There are things like if you have a business, you can get a corporate umbrella insurance, but that's a little different. All right. So moving on to debt financing. So the average the average amount of student loans for people graduating medical school in 2019 was a sweet $230,000. Kind of depending on the source, it runs 200 to 230. But so we're going to go over a basic idea of how to tackle everyone's favorite subject, student loans. Next slide. All right. So you have your student loan debt. Most of us have it. It's just a part of us. It's okay. There are two ways to think about it. You either pay it off or you go for forgiveness. Paying it off, there's generally these kind of two schools of thought. You either pay it off as fast as you can so you get a nice low interest rate and just shovel money into paying off those loans. Or some people are okay with the idea of good debt. So usually people say, you have an interest rate that's around 3%, little under, little over, then maybe consider that as good debt. And you can pay off the debt, the minimum amount for your student loans and invest the difference and end up making more money off of that. And then there's forgiveness. So there's everyone's favorite public service loan forgiveness. And then there's forgiveness after 20 to 25 years. These are specifically for federal loans. And so the 20-25 year thing, so if you have federal loans and they reach the end of their term payment, 20 or 25 years, depending on which type of loan specifically, you will be taxed on the amount that's forgiven. That's what people refer to as the tax bomb. If you do public service loan forgiveness, you are not taxed on the amount forgiven. So let's kind of go into public service loan forgiveness a little bit more. I think we're going to talk about refinancing first. Sorry, next slide. All right, so refinancing. So you have loans, they're at a super high interest rate, you want to pay them down, you want to just be done with them. These are some very common companies that you can refinance through. You can refinance generally as many times as you want to get a lower interest rate. You just want to be careful about defaulting with these private loans. So some of these companies have extremely strict, like if you can get a super low interest rate, they're going to have very strict policies. Some of them say like you cannot default ever for any reason whatsoever, period. Like your whole house burns down and you have to replace everything in it. And you need to say, hey, I need to pause or go down to a significantly lower payment for a few months. Some of these companies will say, too bad, sorry, you signed that contract. Others will be more flexible with you, so just something to keep in mind. Also, generally, if you do a 5-year term, it'll have a lower interest rate than something like a 15-year term. But another thing that people do is if your goal is to pay off loans in, say, 5 to 7 years, some people actually go for the 10-year repayment plan with these companies because there's usually no penalty to pay early, to finish paying them off early. That way it gives you a little bit of a buffer in case life happens, and then you can always pay more per month. But if something happens, you have that kind of buffer where you don't have to pay as much. All right. Public service loan forgiveness. So we've heard a lot about this recently, but key things that I want you to be aware of for public service loan forgiveness, you have to have these 4 specific things. 1, you have to have the right loan type. They need to be federal direct loans. You need to be employed by the correct employer. That would be any company that's a non-for-profit, so they file as a 501c3, or a government agency. This is tricky with emergency medicine because if you're hired by a group and that group isn't hired by the hospital, even if your hospital's non-for-profit, your group who directly hires you might be for-profit. And this is how a lot of emergency physicians, as well as other groups like anesthesia, can get caught. So make sure whoever's giving you your paycheck is 501c3 or government agency. Another thing is that you must make 120 payments. No, you can't make 120 payments any sooner than 120 months. You must be employed full time, which is defined as at least 30 hours per week. You must be employed full time throughout the duration that you're making these 120 payments and when you file for forgiveness. This may be changing, but that's the rule right now. These 120 payments do not have to be consecutive though. In payment plan, you need to be on the right payment plan. It needs to be an income-driven repayment plan. All right, so the future of public service loan forgiveness, if we're staring into our crystal ball here, no one really knows. There's a whole lot of talk about this. I'm sure you have heard that the success rate for people who are actually forgiven is about 1%. That's because a lot of people who applied didn't qualify for one reason or another. They didn't have the right loans was the most common one. The FFEL, the Federal Family Education Loans, did not count, and that's what a lot of people were applying with. In about 2025 is when we should see the biggest boom of forgiveness come along. Elizabeth Warren et al. Is pushing for Biden to forgive $50,000 of everyone's loans. Biden has been talking to his legal team whether he has the authority to do this. His initial plan was to forgive 10,000 of everyone. We still don't know what's happening there. Whole lot of speculation going on. Payments were paused for federal loans from March 2020 until October of this year. If you were in a payment plan and you were doing your thing, another thing to remember is that you need to file your income. You need to prove your income and prove your employer, that you should ideally do every year. We'll have a Google sheet at the end that gives you all these resources. But if you were doing your thing and you were making those payments, all these $0 payments have counted towards public service loan forgiveness, or they will when they reset everything in October. Be prepared to start repaying in October. This deadline has been pushed twice, but it's highly unlikely that it'll be pushed a third time. So just some things to think about with your public or your loans, and whether or not you want to do public service loan forgiveness is a personal choice, but I encourage you to do your research.
All right. That was a lot of high yield information. And as a colleague of Alex's, I can say that she has told me these things several times. I retain about 10%. I just took in another 10% there. So absolutely, there will be some information for you guys that's available at the end of this talk. So transitioning along is something a little bit lighter, but definitely important to hear. And this is just the concept of budgeting and creating a budget. You guys are going to notice literally overnight a massive jump in your income. Typically when I tell this to our residents, they try to stifle some smiles on their faces because they all realize they've been living like paupers for the last several years. And they're now excited about reaping the benefits of all their years of hard work. Some of them even, fantasizing about, running to the BMW dealership with their paycheck in their hand, ready to go. People tend to spend up to their income. In many of our circumstances, a lot of this spending is planned and it's inevitable. You've got family planning ideas and plans to buy a house, plans on replacing that vehicle you've been tooling around with for the last 8 years. That's on its last legs. As Alex mentioned, student loan repayments are going to be a reality that you have to realize coming up shortly. But then there are other things. There's travel, there's clothing, there are all those toys that you've been fantasizing about getting. And you have friends that are in other circles and in other industries who have been living it up for the last several years while you've been in training. And now you sort of, you want to be keeping up with the Joneses now, right? It is absolutely imperative that you reward yourself. You have all worked incredibly hard, but you need to remember that you have other commitments. And honestly, you need to remember that you are still being paid like a physician. You're not being paid like an investment banker or some of these other folks who do make up the Joneses. So something to keep in mind. So next, let's talk about creating a budget. How do you create a budget? Some of you may be very good at this. Some of you may have led previous lives where you were in investment banking or you were an accountant or those kinds of things. And this comes to be like second nature for you. But for the vast majority of us, and myself included, this was not my reality. And so I had to figure out myself and my spouse and our family, how do you control yourself from spiraling out of control with spending once you hit that sort of that massive paycheck? Like I said, I think some of you are probably quite good at doing some of this and having, lived on a relatively meager budget. You need to employ a lot of those same tactics, just realizing that it's on a much larger scale now. So what are some things that you can do just off the bat? Review your spending. The rule of thumb is take a 3 to 6 month period, look at all of your spending, omit the strange outliers that are clearly not things that are going to be happening on a month to month basis. Put things into categories: groceries, car payments, house payments, those kinds of things. But also look at your credit card use. There are several people who are running with something like 6 to 8 credit cards all over the place with massive percentages, and take a look at those, see how much you're using them, see what the point system is, the interest rates, the reward and travel miles, those kinds of things. See which cards are going to work best for you and actually pay you back a little bit, and try to limit how much of that credit card use you're taking in. The next thing is review your own earnings. Look at your salary, options for overtime. How often does that overtime come in? What is your payment schedule? Are you paid every week, every 2 weeks, every month? There are some places that pay every month. You have to create a budget based around that. Do you have outside sources of income like expert witness work, investment planning and banking, income properties that you may have owned during medical school or in a previous life? These are all things you need to review all these earnings and see what the schedule is that this money is coming in so that you can meet out what's going out. Next up is creating some goals for yourself. And these should be sort of short-term, middle-term, and long-term goals. And these are including things like travel, like I mentioned, like buying a new car and paying for that car, house payments, family planning, extra education. Maybe you or a spouse is considering a master's program now that you're finished with residency. Those aren't cheap. So you need to figure out how you can pay for those. Kids' tuition, retirement, those kinds of things are going to be longer term goals, but things that you need to start thinking about now and paying yourself now so that it makes your life a little bit easier down the road. Along those same lines is to start consider investment planning. Do some research, look at what resources you have, assess your own risk. This is one of the first things that you'll do if you work with an investment planner is what is your risk when it comes to putting money away and investing in certain companies and in certain things. You need to get comfortable with the idea of different concepts such as like dollar cost averaging, which is the idea of spreading an investment and your risk over a really long term. That way, you can get a leg in on the market, so to speak, but you don't have to feel like you need to make this massive splash just because you're now getting these massive paychecks. So it's a way to get in on the system without spending all your money in one big chunk. Be aware of what your employer options are. Pre-tax matched contributions. You need to get in contact with the benefits department of your new employer ASAP. Find out what they can provide you. It is important to pay yourself first. For me, I know personally, it is great having deductions that happen on the front end that are pre-tax. They come out of my paycheck before I even see the paycheck. That way, I don't have to do a lot of the active work into figuring out where to put my money afterwards. So it's nice if you have those pre-tax options and deductions that happen. So with all that in mind, let's look at a couple of budgeting tools that we can use. There are a whole host of these out there. Some of you have probably heard of one or two of these. Honestly, I learned a lot about these just by kind of doing some research, and we'll just kind of go through each one. Some of them do a lot of the same things. Some are clearly better than others. Some are free, some are not. Some have free options and then paid options. And you really just have to see what works for you and what you want to use it for. So the first one is Mint. Mint is free. It connects your financial accounts, and it has an app that tracks and categorizes your transactions. It'll give you alerts when you're over your budget in certain categories, or if it spots things like suspicious transactions, and also if you've paid like things like ATM fees. It lets you track all of your bills in one place, and it reminds you when you've got upcoming payments. And it also does have a credit monitoring service, which is nice for some people. So, pros of this, obviously, it's really automated. It's quite simple from a budgeting tool standpoint. It checks your credit score, and it has very good mobile support, and it actually has support with the Apple Watch, which is nice. Cons, it only supports US and Canadian accounts if that's something that's going to be applicable to you. They did have a bill pay option apparently that has been discontinued, so that's not an option with Mint, but it's going to be an option with some other tools. And then it's not the greatest when it comes to being an investing tool, but there are other tools that you can use alongside something like Mint if you wanted to really get into investing. So the next one is You Need a Budget. This is based on the zero-based budgeting system, which is where your expenses equal your income. So you have to have a plan for every single dollar that you earn. This is not free. This requires a financial investment of either $84 a year or like $12 a month. If you're a student and you can provide proof of enrollment, you can actually do it for 12 months for free. But with this one, you can connect your bank accounts, you can set goals, you can contribute to savings, you can customize spending categories, which a lot of these will give you that option for customization of different categories. You don't just have to use the categories that they provide for you. It has a lot of free workshops that are associated with it, which is nice, especially for people that are just sort of learning the industry and trying to figure out how to use these resources. So it is quite flexible. It's got very good security, and it works. It has a mobile app that works for it. The big con with this one is because of this philosophy, this zero-based budgeting system, there is a learning curve, and it takes time and commitment to really understand it and to use it effectively. It's only going to be as good as how well you plug and play all of your data into this system. So next is Every Dollar. This is a budgeting app. It helps you track your spending and plan for purchases. It's also based on the zero-based budgeting system like You Need a Budget. It has a free version, but it also has a paid version called Ramsey Plus, which used to be called Every Dollar Plus. The upgraded version, it allows you to connect your bank accounts, gives you a more streamlined experience, you can imagine, gives you some advice content, some other tools, especially, again, like I said, for people that are just learning the industry. The Ramsey Plus system is $130 a year, so it is significantly more expensive. And if you can find one of these tools that is free that works for what you need, you're going to be in a better spot. Good Budget is the next one. It's based on the envelope system, which is basically where you apportion all of your monthly income towards specific spending categories. And what's nice is that it allows multiple devices to access the same account, so partners and other family members can actually share the same budget with you. It doesn't have you sync any bank accounts. You have to actually manually add the account balances, as well as the cash amounts and debts. And then once they're entered, you can assign money towards different spending categories, which are known as the envelopes. The free version gives you limited number of envelopes, allows one account and two devices, so two different people in your family could be accessing. But then if you have the plus version, which is not too expensive, it's $7 a month or $60 annually, that gives you unlimited envelopes, meaning you can create unlimited categories and up to 5 devices with some other perks. So that might be a better option for you. Honeydew is sort of similar. It's for budgeting with you and your partner. You can see both financial pictures in one spot, but you can choose how much you want to share with your significant other, if that's a concern of yours, I guess. The free budget app automatically categorizes expenses. So, you can set up monthly limits on the categories. It'll alert you when you're getting close to those limits. It also gives you the options of doing things like it has a chat feature and an emoji feature if those are things that are important to you. Personal Capital, the next one is it's primarily an investment tool. And so this might be a tool that you use in conjunction with one of the other budgeting apps that I mentioned earlier. What is nice is that it's free. It has a lot of helpful features. You can connect and monitor checking, savings, credit card accounts, as well as things like IRAs, 401ks, mortgages, loans. So it's a pretty slick system. So it provides a spending snapshot by listing recent transactions by the different categories, and you can customize those categories like a lot of these other apps allow you to do. It also provides a net worth tracker and a portfolio breakdown. So it gives you quite a bit more information than some of these other applications are offering. One of the pros, it has automatic online bill tracking. It also, the mobile applications are quite good for it. But it is a weaker budgeting tool in and of itself, which is again why I say that you may want to use it in conjunction with something else. So just moving along, the last one, NerdWallet. Some pros about this. So, it gives you the tools to understand and improve your own credit score, and it tracks your income and your spending. So the cons really for this is that people have commented that the layout is odd. It's got an unusual dashboard. It has minimal transaction management and fewer transaction categories compared to some of the other ones, especially as far as the ones that allow you to create your own categories. So that's that. And again, you have to sort of research these and, alone or with your partner, if there's somebody else in your life that you're going to be sort of sharing these things with, and figure out what works best for you. Moving right along, as far as budgeting resources goes, you really need to do your homework and research before investing. You have to be aware that we are easy targets. Folks who make a lot of money are very easy targets for banks and advisors and insurance companies and mortgage brokers. They will get your information, and your email inbox is going to get bombed with options and proposals and all that kind of stuff. People are out there who are willing to lend you a lot more money than you're probably able or willing to pay back. So you need to keep that in mind. A couple of resources that we have all sort of found helpful, and you've probably heard of at least this first one, the White Coat Investor. This was written by a practicing EM physician, and it's a high yield manual that, it really deals with the financial issues that face medical students, residents, physicians, dentists, and other, similar high income professionals. Another one that some folks that I know who that follow is something called Bogleheads. It's an investment advice blog that was actually inspired by John Bogle. For those that you don't know who he is, he was the founder of Vanguard. He basically came up with the concept of the index fund. So that's an interesting blog. There are boatloads of other blogs out there. It's worth a look and just kind of see what aligns with what your ideals are and what your plans are and all those kinds of things. Lastly, I'll just make a plug for the concept of financial planners. They can be great resources. Especially if you don't know what you're doing. This doesn't mean you need to have a financial planner for life. This may be somebody that you employ for the first few years while you're getting your feet wet and getting a better understanding of what's going on. And ultimately, when you feel comfortable taking over the reins, then that person can kind of slide out of your advice, out of your life. And I would say that this goes the same for things like tax accountants. We were just talking before we started here about, there are tax accountants that work specifically with physicians who understand the job and work specifically with EM physicians and can really be helpful as far as taking care of things like taxes. So that is my sort of slot of information for you from a budgeting standpoint, and we'll move right along here.
So next we're going to talk a little bit about getting certified, staying certified, and then kind of committing to a plan for continuing education. So everyone who is here, will you go back one second, Jim? Will become certified through either the ABEM, the American Board of Emergency Medicine, or the American Osteopathic Board of Emergency Medicine. I would strongly recommend that whichever certifying body you are going to be using, you go to their website and you kind of take a peek around, even now before it's time to kind of look at what the requirements are. You'll get assigned a username. It will be some random conglomeration of numbers that you'll never remember. So I store mine in my phone as a contact because I don't need it that often. And there's, forgetting your password is one thing, but trying to get them to send you your username is more difficult. So I put that in my phone as a contact. In terms of your initial certification, next slide. Your certification applications will come directly from your program director. So the first step for certification by either ABEM or ABOEM is for someone to tell them you're eligible. So the programs submit their anticipated graduating classes, and the first kind of information that you will hear will come through your program director, who has had to certify prior to kind of notifying you that you meet the qualifications to sit for your certifying exam, that you have completed residency along with whatever residency requirements are outlined in your particular pathway. And that you have now become eligible. The terms board eligible and board certified, you'll see those with kind of abbreviations on jobs, like let's say BE, meaning board eligible, or board certified, BC. And you remain under that board eligible certification until you completed all of the requirements of your initial certification. It is important when you look at jobs, some of course are only for board certified people. Most of them will employ board eligible physicians, but only for a period of time. They want to make sure that they're, hiring employees who are at the highest standards of our field. And so, of course, as a graduating resident who has not yet passed your boards, they will hire board eligible physicians, but you can't just stay board eligible for like 25 years and never take your boards and expect to keep that really amazing job that you have landed. So, for example, in general emergency medicine boards, it is fairly common to be board eligible for approximately 3 years. For example, in my pediatric emergency medicine boards, those are offered 1 day every other year, no pressure. And so it's pretty common in PEM for board eligibility to last 5 years, because the idea being that they want everyone to have at least 2 opportunities in case you're on leave or have an emergency or something that affects your first testing period. Next slide. So what do you do to become board certified? So on the ABEM side, it's a 305 question multiple choice test. Important to remember that it is offered only 1 time period a year in the fall. Now that is over several days at an online testing proctored online testing center. They are catching up, of course, from last fall with COVID cancellations and things like that. But in general, they maintain only kind of 1 period of time each year in the fall for you to take your written boards. ABOEM offers a similar test that's 300 questions. Similarly, experienced some delays from COVID that they are catching up with individuals on. It is offered twice a year, once in the fall and once in the spring. Both groups publish their content specifications, meaning like the percentage of things that are covered kind of under each core content category. So that information is available and important to review as you're studying. We spent a lot of time talking about finances, and one thing that is very important when you think about finances and certifications is that these tests are quite expensive. The written boards alone are approximately $1,200, regardless of ABEM or ABOEM as your certifying body. If you need a board prep course, either because you feel like you need one to be maximally prepared, or because your residency program as part of your clinical competency committees has recommended one, I would strongly encourage you to take that advice if it was given to you. But that's another thing that you'll need to budget for, and that unfortunately is going to need to be paid pretty early in that transition from residency to faculty or attendinghood. So you need to kind of unfortunately plan for it and budget for it while you're in residency so that you have the funds available very early on in your attending career to pay for those kinds of things. There are testing accommodations available for people who are otherwise entitled to them from an American Disabilities Act, or for certain things like breastfeeding moms and things like that. Those accommodations cannot be made by the testing centers without specific permission from ABEM or ABOEM. So if you know that will need those things, please apply as soon as you are aware, so that you have enough time to ensure you get the accommodations that you need. You'll then take oral boards. So those are still alive and well in the field of emergency medicine. You can commiserate with your general surgery or anesthesiology friends. I think we might be the last 3 standing. It is a very odd experience that actually I think is one of the silver linings of COVID. It has gone entirely virtual. I don't know if they'll ever go back. They are both half-day exams. For ABOEM, it's 8 paired cases, so 4 groups. They do 30 minutes each. Those are only once a year in the fall, but you are able to take them either before or after your written board exams. So you may choose as an ABOEM candidate to do your written boards first or your oral boards first. ABEM conversely requires you to have passed the written boards before being eligible to take the oral boards. So that does put a little bit of a complexity into the scheduling piece. ABEM is 6 single cases and 1 structured interview. They are offering this multiple times a year, more in the era of COVID to kind of plow through their backlog. And it remains to be, they have not yet announced what kind of schedule they'll return to following that. In terms of ongoing certification, there are processes in place by ABEM and ABOEM in order to maintain your certification. One of them is that you have, for either agency, you have to maintain a valid medical license in at least 1 state. Some people do locums and they have lots of licenses. That's totally fine, but you can't have 0. You have to have 1 valid license in order to maintain your eligibility. Both organizations include some kind of ongoing modules, and this is a transition that both of them are kind of actively in, moving away from a high stakes every 10-year exam into more of an ongoing continuing medical education system. So on the ABEM side, they have introduced My EM Cert, which is a series of roughly 1-hour tests that are open book, which you must complete 4 every 5 years to maintain your certification. On the ABOEM side, they have moved to modules that are article-based or core content-based, and that core content is outlined each year. And that they have remained for now on the 10-year cycle rather than the 5 years. But what you'll notice is that one's phasing in articles, one's phasing out articles. Either way, both are in pretty significant periods of transition. So as you are involved in your initial certification and moving on to your ongoing requirements, it's important to pay attention to the changes that are rolling out with both programs in the next few years. And each requires some sort of ongoing practice improvement. So on the ABEM side, there's 1 activity per 5 years. On the ABOEM side, it's 2 per 10 years, which you'll notice is essentially the same. They've just divided how their timekeeping is. You're required to do some sort of quality improvement or practice improvement activity on at least 10 patients. Many of us will do these things automatically through sort of ongoing quality initiatives in our department, things like door to balloon time for STEMIs, door to EKG time, TPA, and things like that for stroke or trauma certifications. But if you're out in a smaller facility or a smaller community where those things are not as like clearly outlined and followed, and you don't get the overt feedback in your email about how you performed on those things, you may need to work with your medical director to ensure that you have a cohort of 10 patients with a specific type of pathology or process, in which you are getting feedback about your quality of care to ensure that you're staying up to date with the highest standards. In terms of your state licensure, the Federation of State Medical Boards maintains a website, and that will be in the resources. You may remember them from when you applied to medical school or when you applied to residency. The goal of this was kind of to collate information in one place that could then be sent out to individual licensing agencies. Of the cost, this is the low cost item compared to written boards or oral boards, usually somewhere in the neighborhood of $300 to $400 every other year. Can vary slightly by state. The FSMB website maintains quick and easy links to every state's licensing board. The one other tip I would recommend is that when you do this, use a personal email. Even if you think you love your job and you're going to stay there forever, things change. And so you don't want them to be trying to contact you because something is expiring or they need some piece of paperwork for someone that you're supervising or things like that, and be trying to reach you at a defunct address or point of contact. So utilize your personal email. It does not mean that that becomes like the personally accessible information for your patients or anything on their website. They have very clearly delineated like private information for them and public information for your patients. But that way you won't have any snafus with losing track of things. And lastly, we're going to just talk a little bit about kind of how to stay current in the literature. There's obviously lots of information that you will have learned with robust kind of structure to stay on top of those things while you're in your residency. The first thing I would advise is to do kind of an honest assessment of what learning strategies work for you. Hopefully by this point in your career, you know what that means. And if not, your program directors would be happy to kind of talk to you about some of those learning theories. For me, I remember almost everything I've ever read, and a podcast is just like, it's like there's nothing in there, straight in one ear and out the other. Whereas I know Richard has a longer commute and he uses podcasts quite a lot to kind of get in the mind frame for work. So know what works for you and commit to a method of staying on top of it. MRAP is a pretty popular audio option that's out there. Journal feed is one that our group likes in terms of kind of a written option. It's a daily email that comes Monday through Friday with just a very brief review and a link to an article that was recently published. It covers all sorts of emergency medicine and EM subspecialty topics. For example, one of my strategies is that I skim every abstract that comes to my house. I only read the article if it's something I feel like I should know more about than I do, is really relevant to my practice, or just piques my interest in, for whatever reason, but I do read all the abstracts. People sometimes will pair with a coworker or a couple of coworkers to sort of do their own journal scan. Hey, I found this article. I'm going to read this journal. You read that journal. When you find something interesting, email me 3 lines about it or whatever. Another good option is to stay connected with educational opportunities. And those can be from your former program, especially as we've all embraced virtual. And I think it will, in some capacity, be here for a while, if not forever. If you're going somewhere kind of distant from where you trained, reach out to a program that's in your new local area. No one's ever going to turn down, a colleague who wants to come participate. I know we at Ohio State have a couple of members of our physician community who were not previously affiliated, but they just like to come to conference. They join us by Zoom now. They used to come periodically, even in person. So if you're academic, of course, you'll have a conference requirement, but if you take a community job, they're going to be happy to have you. You have lots to contribute with kind of a different practice environment, and the residents would love to hear from you. And lastly, I encourage you to commit to attending one professional conference a year, and to make sure that it's not always the same one. So of course, every conference kind of has their vibe. SAEM is a little different than ASEP, is a little different than the ski in the morning, conference in the afternoon, wilderness medicine ones, or the PEM conferences, things like that. So pick a variety, but challenge yourself to commit to one professional conference every year.
All right, so now that we've talked about finances, professional maintenance, in the last few minutes here, I just want to shift gears a little bit and talk about one of your most precious commodities, which is your time, and maybe some strategies for how to best manage it. I think we will all agree with the statement here that there are only 24 hours in a day, and we really do want to find a good way of how we spend them. All right, first thing I think you want to think about is this whole construct of work-life balance. I think it's tossed around a lot, but honestly, in my opinion, I think it's really pretty much a myth. I think it's more realistic and probably better for you overall to focus on work-life integration. If you think about the interconnectivity of today's world, it's really impossible to keep all aspects of your life completely siloed. Work leads into personal life and vice versa. And I think having a 50-50 split at all times is, like I said, unrealistic. There will be times when your family or other aspects of your personal life just need more of your time and energy. And conversely, there will also be times when you need to focus your efforts on your career. And I think the goal here is really to identify your priorities at that time and then devote your time and energy to those priorities, recognizing that you should never really be so lopsided or singularly focused that you lose sight of everything else around you. And because nowadays it's nearly impossible to separate work from life, I think if you can find a way to integrate your work and life well, you'll reap positive rewards on both fronts. So if your life is good outside of work, you're likely to be more motivated and productive at work. And similarly, if things are going well in your career, you're going to be more happy and at peace at home. All right, so let's talk a little bit about how we can optimize our work time. So one of my favorite phrases for how to work efficiently was written by Morton Hansen, which is the author of Great at Work. And he said, do less than obsess. And I found this phrase very helpful, especially early on. I think early on in our careers, we tend to say yes to every opportunity that comes our way. And at that point, it's okay, because it's important to have a broad range of skills and to invest in those connections that will help us in our career. But it's certainly not the most efficient way to use our time. And I think the sooner that you can start focusing your work on what you're really most passionate about and really pouring your time and energy into those select things, the more fulfilled you'll be. And because you're consolidating your efforts, the more success you'll achieve in those areas that you decide to focus on. So again, like after your initial year or two out, I think really start trying to trim the fat from your activities and focus your energy on the things that really matter to you. So speaking of things that really matter, like I mentioned before, priorities are really important, and it's absolutely essential to know your priorities. And these are obviously going to change throughout your life. So I think it's a good idea to continually reflect on what your priorities are, both in the broad sense, like what do you want to accomplish in your life? And then also at the granular level. So what do you want to get done today or this week? And you'll want to continually assess your daily and weekly activities and see if they align with your bigger life goals and values. And if they don't, then you need to find a way to unload them. So figuring out your priorities is sometimes the hardest part. We can often get bogged down in just the day-to-day activities of our own existence without really reflecting on what's important to us and what we want to achieve. So I think once you know your priorities, it's pretty easy to find a systematic way of organizing how you spend your time in order to accomplish them. Now, there's no one-size-fits-all for time management, and there are a lot of project management and scheduling out there to help you, but I just wanted to share with you my very rudimentary system, as it has been incredibly helpful to me over the years. So I start with my to-do list, and my to-do list really does look like this, maybe just a bit longer. It's an old-fashioned pen and paper in a 9-by-6-inch notebook, and it sits on my desk. And it contains everything. It contains all of my to-dos, both personal and professional, and both long and short term. And each of my to-dos has a deadline. So it could be a deadline that's externally set by my boss, or it could be something that I just create for myself, but everything, absolutely everything has a deadline. And then once a week, I usually pick Sundays, but you can pick whatever day works for you. I prioritize that to-do list and identify with a very sophisticated star everything that I want to accomplish that week. And then I literally schedule everything that I plan for the week in my calendar. So for me, a lot of things may already be there, like my clinical schedule, I input that once I get it. And some of my first personal commitments, I put them in as they arise. But then I schedule out my to-dos. And I basically just start inputting everything. I schedule any family events that were not on my calendar. Then I schedule my workouts because there was a time early in my career when I literally was never working out despite being an athlete all my life. And then I look at my prioritized list and I estimate about how long things are going to take me, and I schedule my week out hour by hour. And I will say it takes a little bit of practice to get good at estimating how long it will take you to get various things done in the beginning. So I highly recommend overestimating. But as long as you're reasonably accurate, you'll find yourself pushing to it and actually succeeding at getting your things done by your self-imposed timelines. So a few little scheduling tips. I think build in transition time. Your brain and your body need time to switch focus, especially if there are changes in locations, equipment, or clothing. So build that in. I do think timing matters. So it's not just the pure number of hours that a task requires. It's also the time of day, and specifically what you will be accomplishing at that time of day and when you're most effective. So I'm a morning person, so I try and schedule anything that requires any sort of creativity or higher cognitive ordering processing between 8 and noon. I also know that I need chunks of time for certain activities like manuscript writing. So I'll take days where I can actually feed that in. I think some of the other important tips are just to eat lunch. You may have noticed in my week schedule that I have a lunch break about an hour every day. And it doesn't really take me an hour to eat lunch, but I think having that break makes me more prepared and ready to face the afternoon's task. As, as emergency physicians, I think you are all ready to expect the unexpected and have probably figured out a way to accomplish this. But do this with your schedule as well and purposely leave in open spaces for those times when you need to put out fires. And then last thing I think I'll just say is don't overschedule. I think it's really tempting to try and plan everything, but it's just going to be beyond your control and it become overwhelming. So I think leave those times in for a little spontaneity in your life. All right, in terms of time-saving strategies, I really like this idea of the focus funnel. It's a really great way to save time and optimize your productivity. And first, like I mentioned previously, trim the fat. So eliminate whatever you don't care about or whatever you can live without, like constantly checking email. I used to do that all the time and it was a big, huge time suck. And now I try to only check email twice a day. I think the next thing that you can try and do is just outsource where you can. And this can include automation or delegation. So put your bills on auto pay, make tasks habitual and link them together. So like doing a workout, 10 minutes every time, every morning before you brush your teeth. You could sign up for grocery delivery. You could hire a house cleaning service. Obviously, some of these things will cost money, but when you're done with residency, you'll find that you have plenty of money to pay for some of these things, and they will save huge time dividends in the end. All right, so there are tons of books out there to be productive, and these are just a few that I have found helpful, but I think the big thing is really to just be deliberate about how you use your time and find an organizational system that meets your needs, and then really stick to it. And this is just a QR code of some of our compiled resources from this entire talk. And then if we have a couple of minutes, we can open it up for questions.
And I'll put the link to that document of resources in the chat as well.
Yes, we have about 3 minutes for questions if anybody who's in the audience has any.
I just want to highlight something that's in the resources link there is, I know it can be difficult, right? Like everyone tells you to make a budget, but if you're going from resident to, or, medical student to residency or residency to your first job, there are ways and resources there to kind of estimate what your actual take home paycheck will be. And so that's helpful to at least start a budget there. And then you can always adjust when you see what actually hits your bank account every week.
And one of the other things that I think people forget about is setting up their W-4 so they actually don't owe a huge tax bill. There's actually a pretty good calculator on the IRS website that lets you put things in and it'll let you know whether you should be owing or you'll end up with a big refund. So that's a good thing to look at too when you're setting up your budget.
And that IRS tool is in the resources as well.
Okay, well, sounds like nobody has any questions. Thank you so much, Alexandra, Richard.
Sorry, it looks like there was one that just popped up about
Okay.
childcare.
Yes, any tips on affording childcare, either from nanny daycares or blogs on this?
I do not.
I think you'll find that there's a spectrum. I'll share my story. I do have 2 kids. We do a nanny share. I think there's a spectrum of costs, and some of this will certainly be determined on the region of the country in which you live, because some of these things are going to be more expensive in different locations. Aside from just your standard, I think daycare, school-associated programs, and then having a personal nanny, think about some creative things. So there are sometimes you can find co-op groups, or like we personally do a nanny share with our neighbor, which has really worked out well to get more dedicated care at a more reasonable price. So lots of options out there, I'll say.
Okay, last call for questions, because I guess we have to be done by 9:55. So anybody else? If not, thank you so much, all 4 of you, for a great talk, and we'll see you at your next talk.
Thanks, everyone.
Thank you.